All right. So today we're going to go over day three, actually, KJ Cash Bootcamp. We're going to talk about DeLorean and exponential moving averages in general and how they work and how we're going to use them to find confluence in price action for entries. We're also going to talk about stop losses and exits as well, but more so entries, targets, and just an in general guide to what's happening with price so that we're not just sitting looking at a blank chart without knowing what's going on. So one key thing to note about exponential moving averages, and I gotta move this a little bit. One thing to note about exponential moving averages is it's just the moving average price for the last so many candles. So what do I mean? If you look at price as a line, if you look at price by itself, then this, for one, only thing that's actually price is this dot right here. This dot, this number is price. So every hour is a new pivot, or every minute, depending on what time frame you're on, to show you what price has been doing over a certain amount of time. Because otherwise we'd just be looking at a dot, and that would just be way too hard for us to get any type of indication on what's going to happen next. It's just numbers. So we put those numbers on a line, and we use this line to say, okay, this is what price has done, and based on price doing that, it could be doing this, right? Now, an indicator that they added to this would be called a candle. And I just have to do a brief explanation of candles so that we can get a clear understanding of why exponential moving averages are important. Now, on bearish candles, you got the open at the top, the close at the bottom, and each wick represents where price has traveled over a certain amount of time. But the open and closing price is the actual price point for that time frame. So if we're looking at the 1 hour, this was the open of the 1 hour candle. Let me zoom all the way into what I'm talking about so we can really see. This is the open, price pushed down, came all the way up, pushed up a little bit, then closed here. On this candle, this was the open, price pushed up, came all the way down to here, then came back up and closed here, boom, closed, boom, boom, close, boom. When you think about that, you're like, okay, I see what price is doing, boom, boom, close. So on and so forth. So just so you know, if we were to just put a line at where price opened and closed, you'll see, with ignoring the wicks, you'll notice, whoops, that is exactly where price tapped on that hour. It's right on the dot. But the wicks go a little bit further, because in reality, price was here, but then came back up to here when the hour closed. So this was the hour pivot point on the line chart, if that makes sense. And so that's why candles just give us just a little bit more indication of what's been happening, because it shows us where price has been, not just where price is closing at. So if we were not looking at the chart, we can know at least that's what price has done, right? So let's move these lines. I just had to explain that really quick. So then a moving average shows us the price line for that many candles. Now, DeLorean is a combination of different moving averages, and that's why I wanted to explain everything. So while this blue line, this blue line here would be current price, this yellow line is the moving average price of the last 5 candles. So it takes 5 of these, gets the average, and that's the yellow line. It takes 13 of these candles, gets the average, and that's the red line. It takes 50. So out of 50 candles, this aqua line is the price for the last 50 candles. The gray is the last 200 candles, and blue is the last 800 candles. Now, the thing to note about moving averages is when price is above, they're playing as active support. When price is below, they're playing as an active resistance. We're looking for price to bounce off of them. Whether price is on top, we want price. So if price is on top of our moving averages, and let me just zoom out really quick so I can get to something where we can really see. If price is below, like right here, we're looking for that bounce down, bounce down. Then the break and close above, we're going to wait for that retest, and then we're going to be looking for that bounce up. That's just in general on moving averages. Now, when it comes to DeLorean, The reason they have all of these different ones is so we can get a clear indication of trend. So one of the main things we want to look for in DeLorean is AGB, and that's on any time frame. Before you take your trade, you want to ask yourself, is AGB, AGB, AGB? Is aqua, gray, and blue in alignment? And if aqua, gray, and blue is in alignment, you have a trend. Now, what kind of trend? Well, if they're playing as an active resistance, meaning they're all above price, you're in a downtrend, just as you see here. You see aqua, gray, blue, breakout right here. Let's just put a quick line right here. Boom, aqua, gray, and blue. And from that point on, it was basically you're looking for all of the sells you can catch, all of the indications of the sell, because you have aqua, gray, and blue above price. Now, if you have aqua, gray, and blue below price, as we do here, from this breakout forward, right? And of course, there's ways to catch these trades. We'll talk about that in another session. But the DLO trades will start here. And this is the run you're catching. From here to here, you're going to wait until your EMAs are no longer tangled. You're going to get in that uptrend. It just takes patience. Now, we're on the 1 hour, but I just want you to recognize it on the 1 minute. You get these switches way more often and way more clear. So it's just, I don't know why it's loading so slow. Am I lagging or am I good?
No, I did earlier, but you're good now.
Okay. We did, but we're good now. So on the 1 minute, you see aqua, gray, and blue a lot more clear, and it's just literally just bouncing off of blue all the way up. I hope I don't have to end the link and restart it for it to stop this lagging, but it seems like it's lagging. Let's just do this real quick. I'm just gonna close that. See, it didn't even give me the message. I just have to restart this. Sorry, guys. It's not responding right now. My screen is glitching. Can you hear me?
Yeah, I can hear you.
You see my screen glitching too?
Yeah.
Yeah, that's wild. That sucks. Wait. I'm recording. It's all good. We get into that information. Be right back at it. We are right back at it, y'all. So, as you can see, aqua, gray, and blue, and this is the 1 minute. So it's like you could do this on any time frame. I really do the 1 minute and 5 minute because I still HFX trade, TBX, time-based binaries, and this is fire. And as you can see, it's fire here too, and you could get a more indication. So the 1 minute's on an uptrend. And again, you're just looking at AGB. So let's stay focused because I want this to be a clear, concise training. So then how do we find entries and exits? How do we use these lines then? The way that I've come to use them and find my most success is by looking at the crosses of the lines to find breakouts. Now, of course, you're going to get consolidation, at which point you're going to need to use a couple of extra tools. But basically, what we want to see is yellow crossing red, either crossing up or crossing down. And we're just going to look at some examples of that. Now, if we got yellow crossing red up, we're looking for buys. If we got yellow crossing red down, we're looking for sells. So I just got to scoop these again above price so you can really see the lines crossing each other. And here we go. On this example, as price, and you want to wait, let's just do one thing at a time. We got the yellow, which is the 5 crossing the 13. Let me rewind this right here. So let's just paint a picture in our heads of what's happening. Price has closed below the 50, which symbolized a drop. It came down to the 800 and the 200 and rejected both of them, right? Then comes up, rejects the 5, comes back to the 200, rejects again, and now we have a potential yellow crossing red up. Now, one thing you want to make sure you have in DLO for one is aqua, gray, and blue underprice, which we don't have, but we need space for the shoot up, which we don't have either. So we want to wait to see what happens at aqua if yellow crosses red, because you need space. What do I mean? What do I mean by I need space? I'm going to show you. I'm going to show you on this cross down right here. I'm going to show you both. I'm going to show you. Right here on the cross down, we have all of these EMAs in the way. There's not a lot of space for the drop. But as price continues to trade, and then we get to close below the 50, Price bounces off the 200, and then we get the close below the 200, right? We do this. At this initial moment, we don't have a lot of space for the drop. We do have potential TPs, which is our EMAs, so we know price rejects and is attracted to our TPs. But we really want that close below here, because as you can see, this whole area is basically clear and free for a nice drop. There is not a lot of space between this shift and these, though. So we want the shifts to come with space under or above price. So let's see what happens as price continues to consolidate. It's going to bounce. There's not a lot of space. TP1 smack. Let's just keep looking, though. We're going to wait for that close below here, and then we're going to analyze. We're going to analyze. Now, this is where we ask, hold on, next candle. We're going to wait for that shift down. Now, this isn't yellow shifting with red down, but I want to paint another picture because this is also a very important part to remember. When the candles were right here, and I'm actually going to rewind it. I just got to remember where we was at. As yellow was getting ready to shift up, I want us to recognize, and we're not here to be future tellers, but one keynote that I did not mention in the beginning is that EMAs are lagging indicators. There's a difference in future and lagging indicators, and the lagging indicators move after price. So it's going to give you the indication after the move is low key already started. So saying that to say, first, we got what looks like a shift up and a buy towards the 800. But what we have to recognize is the next candle needs to be bullish before these actually shift. So if the next candle is bearish, this is then going to do a rejection, which is the exact same thing as a shift down, because instead of it shifting up in this exact moment, we get the bearish engulfing, which is a sell signal. Okay, just like the shift up is a signal, the rejection is a signal. And I'm trying to find one more rejection for you. Boom. Right here, it shifted down, came and dropped. It almost shifted up, then it dropped. And that's what we also want to look for. So it just takes an extreme amount of patience. You can't just say, well, it looks like it's about to shift, so I'm going to get in and put my stop. No, because the very next candle is giving us what we actually, well, it actually did shift up. So that wasn't the right example. Sorry about that, guys, but we're about to see right here. Because it's going to give us a shift down, it's going to come back up, and it's going to give us a rejection. And that's where we want to take it. So this is the shift down that we really want, but it's turbulence. I just didn't rewind the candles enough. Turbulence, like I said, no space. We still want that break and close. Same thing is true from over here. Now, this was the rejection I was talking about, and I'm sorry that I didn't explain it as clearly before, but right here, we needed this to be a bullish candle and this one. So yellow can shift with red and carry price up to break this level. However, we got a bearish engulfing as yellow rejected red. And then we got what's about to turn into a big melt right after we get this close below the 200. We just need, again, space for the drop. So one more rejection, same exact thing again as a shift. And that's why I just want to paint this picture. And it's a little bit more complicated, a little bit more advanced, but that's okay. Because yellow right here in this moment could have gone for the buy again. But we need that bullish candle and we need the close above the 50 because there's no space. If we get the close above the 50, we can get that push to the 800. Yellow can shift with red up. But if we get that close below the 200, we got to come to the next level of resistance because there's no EMAs to stop price. Plus, you know, boom, 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 boom. I'm not even gonna get into that. Let's just look at it. Just EMAs right now. We got a rejection off red. Boom. The close below. A retest. And let's see. Now this close below was major for me. Boom. That's exactly.
VOS.
Now the thing about this is, in the heat of the battle, what you're gonna see is you'll start to recognize, and it's not gonna happen right immediately. I hope I can go slow enough to see it. But Right here, I'm telling you, the close above this, we're looking at buys so clearly that the moment this candle comes up here and pulls back to here, you're gonna know it's time to sell. You're gonna be like, oh, it literally rejected the 50 and it's gonna close below the 200. Not only that, you see it now push below both points where we said, if it does this, it's gonna sell off, and yellow is rejecting red. The classic yellow-red rejection. Now, of course, as the candle was up here, because this was at first a green bullish candle and it looked like it was gonna buy, yellow has shifted with red up, which is why it's important for this type of trading for us to be paying attention. And I'm not talking about limits right now. These are market execution trades, because we got price was moved, and I can't show you in slow motion because it's just one candle, but price had moved up. Yellow has shifted with red up, but as it came down and rejected the 50, then cleared these candles, it was a clear. Each of these was low-key trading moment. Boom, you could have got in for the sell with the stop here. Boom, cleared this doji. Now it's a bearish engulfing. Stop above this. Boom, cleared the yellow and red EMAs. Stop above those. And then it cleared the 200. Stop above that. Lastly, broke these two levels. Stop above those wicks. Either way, market melted right after we got our DLO shift down. And the very next candle was nothing but bearish action. And so it was no drawdown on this market execution trade. Not only that, lo and behold, from our entry, 1, 2, 3, 4, 5, 6, 7, 5 candles later, we got AGB again. AGB in the downtrend. So while we were here, we had to recognize that if price does close below here, we could potentially be getting back in our downtrend. This could have just been, what do they call it? Retrace, right? So yellow shifting with red, entry. Yellow shifting with red up is buy. Yellow shifting with red down is a sell. The rejection is the same as a shift. Now we want to put our stop losses. We want to use these EMAs to hide our risk. All right. So if we're looking for buys, like this opportunity right here, let's check it out. Right here. It's pretty good buy opportunity. So we hop on the charts. It's Wednesday. What is that? 3 a.m. Wednesday, London session, right? We got price action. We got aqua gray and blue in alignment, potential uptrend, and we got yellow shifting with red up. So let's just watch price action to see what we got. Now, right here, I just really wish I had more to look at, but that's totally okay. And I should have got it right here, but cool. Let's just say we hopped on the charts at 4 in the morning. We're finna get into that New York session. What we've gotten right now is a potential breaking close above the 50. So you have a lot of options on your stop losses here, okay? For me personally, what I like to do is hide it. If we have a direct EMA right here, if it's 2 of them close, I'm gonna hide it over the biggest one because that's the actual trend change. If price comes down here, it's gonna be melting. And here's the thing about trading, and you gotta also recognize your account size and can your account size handle the stop loss. But it's okay to get this wrong. You just don't want to lose your account if you get it wrong. So if you really think it's buying, literally, this is where it would turn into a sell. We need price to break and close below this. Ironically, the 200 EMA is right here as well. So I would put my stop near the 200. Now, if the 200 was a lot further down, I'm very comfortable, very, very, very comfortable putting my stop under the shift, the last shift. I hope it didn't freeze again. Can you hear me?
Yeah, I can hear you.
Screen froze, but damn, I don't know why that's happening. I don't know why we're getting so much turbulence right now. I might have to redo this and just re-record it because I want this to be a smooth recording. And the screen keeps freezing. But since you can see the circle, I'm just going to show you. I would want my stop losses to be under. So since yellow is shifting with red here, you can either put it here, which is a little risky. I just like it under the wicks, honestly, because I know the wicks can attract price. So I'm always putting it under the wicks. Again, the 200 is there, so I'm just going to slap it under the 200. And we're looking at a 30-point risk. Wow, my mouse has disappeared. This is rough. Uh,
I can
so
still
I'm gonna
hear
end up
you.
stopping the recording. You got any questions, anyways, so far?
No, the only thing I had was the amount of candles for the EMAs, but that you answered that earlier.
Good. Also, I'm just gonna start just doing some random facts now because the recording stopped. And we'll do this again. We could just do the DLO again. We're gonna continue the boot camp, but I want to get a good recording off, and I don't want the screen to be freezing. And but just some stuff to keep in mind, man, is the closer. Damn, I gotta figure this out, bro, because maybe I can play with my phone and share my screen. The closer the EMAs are, the more explosive the breakout